L&T is the top Nifty loser despite a steady set of numbers as guidance for FY25 disappoints. The management guides for margins of 8.25% in FY25, underwhelming street expectations. The company is also expecting a 10% order inflow growth this year.
Muthoot Finance and Manappuram Finance fall after receiving an RBI advisory telling them to strictly adhere to the Income Tax Act provisions on cash disbursements. The management of Muthoot tells CNBC-TV18 that the advisory will not be a problem as 80% of customers are in non-cash channels.
Piramal Enterprises also falls on the back of its fourth quarter numbers as net interest margins dip 100 basis points and assets under management decline 2.8% year over year. The company will also be merged into its housing finance subsidiary Piramal Capital and Housing Finance in the next 9 to 12 months. The stock is in the F&O band today.
Tata Power loses as margins disappoint in the fourth quarter, while revenue and net profit beat estimates. The management tells CNBC-TV18 that renewable energy capacity addition remains strong, although brokerages CLSA and Goldman Sachs issue bearish calls on the stock.
And Sula Vineyard slumps as the fourth quarter margins contract due to higher other expenses. Net profit also declines nearly 5% year on year. In fact, the management will join us shortly to discuss the quarter gone by, so stay tuned.
Hello and welcome to Chartbusters. I'm Rajul D'Souza. Joining me today is my colleague Hormuz, who joins us on the show. Well, Hormuz, it's that sort of a day. We should get the indices up above us on the screen, and most of those indices are trading in the red. The Nifty is getting a little bit nervous at higher levels. The problem today is that in the first hour of trade, we've taken the 22,185 mark on. So that's going to be important. We need to bounce from somewhere during these levels, around 22,140 or 22,150 approximately. I'll tell you why. This market is net short. The PCR has come down to around 0.68 odd. And those are crucial triggers, not to say that we can't fall further from here, but if the bulls want to defend a mark, this is around those levels.
Both of us being fans of cricket now, it almost comes down to playing for pride, right? Now that you've lost so many important supports, right? We went below 22,500, we went below 22,300. Yes. Now we are now defending 22,150. So it's a tough task for the bulls as we go ahead, since it's also the weekly options expiry as well. 22,140 now on the Nifty. And the pain actually is in the broader markets, particularly in the small cap space. The index is down close to 1% yet again. And 85 stocks out of the 100 on the small cap index are trading with losses. The mid cap index is also down close to 0.5%. Over there also around 70 stocks are trading with losses in today's trading session. So not good going for the market as a whole, but plenty of earnings reactions as you can see on the Nifty as well. On both sides of the spectrum, Hero MotoCorp, the top gainer on the Nifty after the results, 5.5% higher there. And on the flip side, L&T, the top loser on the Nifty after that disappointing margin guidance that it issued. So almost 6% lower at one point of time, has managed to claw back some of those losses, but still trading 4.5% lower. Price target cuts coming in across the board for L&T. We'll talk about all of these as the show goes by, but good time to get in a technical check on the market now. Apurva Seth of Samco Securities is joining in. Apurva, good morning. Thanks a lot for joining in. The 22,150 now is the level to defend, isn't it, for the bulls? Now, if a hypothetical scenario, if we fall below these levels, what do you watch out for the Nifty?
Good morning. Thanks for having me on the show. So 22,150 is a crucial support level. We will have to wait and see whether the market is able to hold above these levels or not. But I'd like to add a data point. So last week when I was there on the show, I'd said that the market is moving up laboriously, and going forward, it is going to be a difficult task. So 22,800 was the resistance that we were talking about. And right now, market has slipped way below it. And if you see, the market breadth is not so strong. So in January, when we had hit a new high, there were more than 200 stocks on the NSE net, which had hit net new 52-week highs. Whereas right now, the number has fallen below 100. So even as the market has moved up, the number of stocks that are hitting new highs on the NSE are falling. So that does not show, that does not say that the market is healthy.
Apurva, I mean, the bulls will not like if I ask this, but I have to. Where do you think we're headed? Where's the support level?
So the crucial support level is around 22,000 level. So even if we bounce back from here, the bounce will not be a very strong one. We would you can expect maybe 100, 200 points of bounce back, but then markets will again stay neutral or sideways. And I think everyone is waiting for the event to pass by. So the trading during these times will be difficult, at least till the election results are out. So I think for a month at least, it will be difficult for traders to make some money from the markets.
Well, 22,000 is a very important level. We haven't closed below that since the 21st of March. So we'll keep an eye out on those. But specific stocks, Apurva, what are you recommending this morning?
So auto sector is something that looks interesting right now. So Eicher Motor is one stock which is consolidating and looks like it can break out of the flag pattern. So from a short-term perspective, stop loss will be 45.50 and a target of 5,000. And on the short side, I would prefer to go short on L&T. The stock has slipped lower, so I would wait for a bounce back up to levels of 3,400 or 3,450 and go short with a target of 3,150 and a stop loss of 3,500.
Okay, Apurva, appreciate you joining in. Wishing you all the best and looking forward to having a chat with you rather soon. For the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat Gyani of moneycontrol.com joins us to talk about a stock that is tracking closely. Bharat, take it away.
Today's ideas will be DMart Limited. The company posted strong Q4 results with a revenue growth of 20% YOY. The business area expanded by 13% YOY, while the revenue per square feet grew by 6% YOY, crossing the pre-COVID levels. Healthy like-to-like growth for existing stores and pickup in the sales of new stores boosted the revenue per square feet performance. Gross margins improved by about 50 basis points YOY, driven by a better product mix. We expect demand to continue the cluster-based expansion strategy. Healthy cash flow generations and a strong cash on the balance sheet will enable the company to open new stores aggressively. DMart Ready, which is the online business of the company and is currently loss-making, is witnessing a very gradual ramp-up, enabling the company to restrict the overall losses. We expect the margins to improve going ahead, driven by a better product mix and improvement in the operating efficiencies. Although the share of online sales in the grocery industry has ramped up very significantly, there is still a lot of growth potential for brick and mortar centric players like DMart. At the current market price, the stock is trading at a PE of 73 times FY26 projections. While the valuations are at premium, but they are justified given the strong earnings outlook.
Thanks a lot for that, Bharat. It's time for a short break here on Chartbusters. Up next, we'll be joined by the management of Sula Vineyards. Rajiv Samant, who is the MD and CEO of the company, will join us to discuss the quarter gone by. Stay tuned, back on the other side. Back with us here on Chartbusters, and over to some buzzing stocks now in trade, and those are auto stocks. The auto index is the only sectoral gainer today, and it was the sectoral gainer yesterday as well. Sudarshan is joining in to talk about two stocks that are buzzing, Hero and TVS. Sudarshan, over to you.
So in this subdued market, one sector that is outperforming is two-wheeler, and this comes on the back of strong numbers reported by Hero MotoCorp and TVS Motor. Both these companies have reported earnings better than estimates and are significantly higher even year on year. First, talking about Hero Moto, margin remains above 14% and it's up almost 100 bips year on year, and company says it sees multiple tailwinds for the sector over coming quarters and will be driving market share gains. For TVS Motor, reports margin of above 11% for third straight quarter, and it's at 11.3%. Revenue is up 24% and EBITDA has risen 36%. And company says EBITDA will continue to improve quarter after quarter, and two-wheeler industry to see a healthy growth this year, and also company will see better recovery from rural market. Now talking about brokerage views on both these stocks, first on Hero Moto, Jefferies has a buy call with a target of rupees 5,650 per share. It says EBITDA per vehicle has risen 5% sequentially to a new high, and two-wheelers are poised for strong double-digit growth over next 3 years, and it sees 17% EPS CAGR over FY24-26. CLSA has an outperform rating on Hero Moto with a target of rupees 5,280 per share. It says rich product mix and reduction in raw material costs impacted earnings positively. Now on TVS Motor, Bernstein has a market perform rating with a target of rupees 2,050 per share. It says Q4 results are on expected lines, with volume being a key driver, and it's a preferred pick and stacks up after Bajaj Auto in the pecking order. Jefferies has a buy call with a target of rupees 2,525 per share. It says company will be a key beneficiary of two-wheeler demand revival, and EPS has more than trebled in last 3 years, and it expects to more than double over next 3 years.
Okay, all right. Thanks a lot for joining in, Sudarshan, and giving us that crisp summary. Well, time to slip into a short break. As we do that, we have an announcement to share with all of you. Our upcoming live personal finance webinar, CNBC-TV18 Accelerate, will feature none other than the top market expert, Nilesh Shah, MD of Kotak Mahindra AMC, who will answer all your questions on managing your finances and also conducting a special masterclass on what to do with your finances and the mistakes to avoid. CNBC-TV18's Accelerate, Personal Finance Handbook with Sonia Shenoy. We'll also feature 3 well-known experts, and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join us on 11th May at 9 a.m. We have limited seats. Scan your QR code to register. Welcome back. Let's get to a drink then. Sula Vineyards company reported a decent set of numbers, but the margin's a little bit under pressure. To understand what's the outlook from here on, we're joined by Mr. Rajiv Samant, who is the managing director of the company. Hi, Rajiv. Good morning and good to see you in. Well, give us a few details. You know, the FY24 is out of the way. How is FY25 shaping up? And if you could narrow down to a few numbers, what is the volume growth, the value growth, and the margins we should work with for the coming year?
So overall, the outlook looks very bright, continues to look very bright for our premium portfolio. So, you know, the story of Sula has always been one of premiumization. We've seen that play out in FY24 and in the last quarter as well, where our premium portfolio has vastly outperformed our cheaper wines. We expect that story to continue in FY25. We look forward to achieving good double-digit growth in our premium portfolio. We did have a little softness in Q4. One of the big reasons for that was that the secondary markets have in fact performed much better than our main markets of Maharashtra and Karnataka. That's really good news actually for the long term, because those are non-traditional markets which are starting to come into their own as wine consuming markets as well. But those are slightly less profitable markets, and hence that does show up. Looking ahead to FY25, we are looking forward to another strong year of growth. Q1, however, is a bit of a challenging environment, considering the elections, a lot of restrictions being put on the trade, some issues with the corporations. So Q1, and there's a fairly strong comparative. So Q1 a bit challenging, but FY25 looking bright.
Okay, all right. Bright would mean double digit for premium segment, which is bulk of your total mix now. So double digit for the consolidated entity as well is something that we should work with. And give us a margin guidance. This other expenditure is spiking up big time.
So, you know, I don't want to give any specific guidance. You know, we've had 7 consecutive quarters of top line and margin growth and profit growth. So, you know, it's delivering that quarter after quarter is not necessarily going to happen. Wine remains a very exciting long-term story. You know, I think that you should be focusing more on annual growth. I have always guided that the 30% margin that we have reached is a bit high. That really speaking, natural margin in the long term is a bit lower than that. So that has played out in Q4, and moving forward, you know, we do not expect to be always hitting those 30% highs in terms of margins. We want to push wine into those areas where it's not consumed right now. I think that should be really our priority for now. That's what we're going to do. And that will have some impact on margins.
You know, Rajiv, the elite and premium segment, as you mentioned, now is up. It's now contributing 75% of the overall sales. Do you think that figure A is sustainable? And since you're saying that you're trying to push wine to other non-traditional markets as well. Do you see that number normalizing as well, or do you see that share going up as the year goes by?
So I think a 75% share, which is of course a historic high, is very much sustainable. Whether it's going to go up further or not, it looks like it's probably going to go up even further. And that's very much our priority at Sula. Let's just put it in perspective. When we talk about premium, we're talking about 700 rupees MRP and up in the state of Maharashtra. We always look at Maharashtra MRP, which is not a hugely expensive price point. It's a very much affordable premium, you can say, and that is very much our focus, and we expect that 75% share should go up from there.
Okay, all right. What's the outlook for the wine tourism business? FY24, you did a 22% growth, came in at around 55 crores. How do you see this part of the business growing?
So I'll give a little color here. Actually, if you look at the overall wine tourism revenues, including the wine that we sell there, that wine actually shows up in our own brands revenue. It doesn't show up in wine tourism. It was close to 100 crore business. So something between 15 and 20% of our top line. Extremely strong growth in FY24, and I'm very happy to say we have a very strong pipeline of new projects ahead. We have taken a big leap in this past quarter by opening our first standalone tasting room outside our wine campuses. And we've decided that's the way to go. We don't want to be tied now only to our campuses. We want to take wine out there to the people, to our consumers who can't always reach to one of our campuses. So this is very exciting for us, and watch this space, many more to come.
Rajiv, I watched it very, very closely, and I'm ready to experiment as well. So for a customer like me, I'm looking at wines, beers, particularly with the weather. Now, we had the United Breweries management yesterday as well, and he was sounding very, very optimistic. How does wine fit in as a category? Beer as well is expected to grow at a fast clip. So could you tell us, for the industry asset class, so to call it, how do you see wine grow, and what are the penetration strategy over there?
So we are very bullish on the growth of wine in India. I want to point out that if you look at the macro picture, this is by far the lowest consuming country in terms of per capita consumption. Way, way, way lower than if you look across even at China, which is another non-traditional wine consuming country. So, just like the beer guys, in wine also, we are very bullish about the way ahead. It's natural that this category should get up to at least maybe 3 to 5% in the future. I mean, we're talking about, of course, a decade ago. Today, it's less than 1%. So this is a story that has a long way to go, has a long way to play out. This is a decadal story. This is not a quarter-to-quarter story. And Sula is firmly in the driver's seat. We have gained market share in terms of premium wines in this quarter and in this year. And we are definitely the strongest player in this segment. So we are very bullish on the way ahead.
Very bullish on the way ahead. That's music to a lot of people's ears, Rajiv. But I wanted to ask you about the acquisition that you made, that of ND Wines. And you've mentioned in your earnings release that the work is about to begin on expanding that 120 square feet bottle shop to a 3,600 square feet wine tourism destination. Can you tell us more about that? By what time is it expected to be completed? And if there is a capex involved, how much is it, and how do you plan to fund that?
So the work is already begun, in fact. So we've already started clearing out, there was some big office space, etc., which we've already started clearing out. So we are going gangbusters on it, and we will open it within this financial year itself. In fact, we are aiming for within this calendar year itself. So it is going to pay off before the end of the financial year. In Q4, we will have a great comparative on that. We're not talking about a lot of capex. When you talk about a bottle shop, a gift shop, a wine tasting room, a restaurant, we're not talking about a lot of capex. This year, the capex plan is around 60 crores, which is about the same as last year. 2 years ago, it was more like 80 or 90 crores. So it's a very manageable capex all in all. Some part of that is the wine tourism. Large part of that is renewable. Just I want to make a note here in terms of our renewable energy. We are now up to 60% of our energy from renewable, and we have targeted 70% of our energy. And wine is pretty energy intensive, just like beer. We are targeting 70% of that coming from our own renewable. So that's a large part of that capex as well.
All right, give us some clarity on the wine industrial promotion scheme. How is that panning out?
So you'll recall that we had reached about 140 crores in dues from the Maharashtra government. We are very thankful to the government for then reviving the scheme, and very pleased to note that on the last day of Q4, March 31st, we received close to 90 crores out of that outstanding. So the outstanding dues have now come down a lot. That train has started moving, and so we do expect to get regular payments on this. It did cause a bit of financial stress, and that's why you have the high interest costs in Q4, which led to PAT, a little bit of a disappointing PAT scenario. But now with 90 crores in the bank, large part of that going back towards repaying debt. So the interest scenario going ahead is going to be much healthier, and you will see that reflected in PAT growth.
All right, Rajiv, thanks a lot for joining in. We'll keep an eye out on how the sales pan out, how the year pans out as well. And we'll keep an eye out on the wine shops and see what they have to offer. You've been, launching a few new products, which often they pitch to us. I'm a consumer. My colleague, Hormus, I'm trying to get him back on board on this side as well. Wishing you a good day ahead, Rajiv. Thanks a lot.
Thanks a lot.
Thanks
Enjoy it.
Thanks a lot for joining in. Well, by the way, when we're having that chat with Rajiv, the markets continue to see some selling pressure. So we'll wind up on the show with news that the Nifty is around 160 points. The Nifty Bank today is doing a relative outperformance. The breadth of the market firmly in favor of the number of stocks that are declining. You stay with us. Trading Hour comes up next.